You there, Mr. Michael?
I can hear you loud and clear.
Perfect. I wanted to thank you for joining me today, brother.
Glad to be here. Thanks for putting this together.
You could hear me okay? Because I know we had it delayed earlier.
Yeah.
There was a little bit of an issue.
Yeah.
Perfect. Okay, good. So I want to welcome everybody who's joining us today for the webinar. The reason I'm putting this on, frankly, is, and Mike, you know, I've been getting tons of questions, either text or phone calls. People who have my cell phone number or emails, and they've been following me for the last like 3-4 years, asking me how in the hell I'm going about scaling my business, right? And so the two questions they have are three questions: how you finding the properties, how you going about renovating the properties, and where in the hell are you getting your money to scale? It seems to be the questions that are popping in all over the place. Sorry, I just had to shut my phone. So what I wanted to do is, instead of answering these questions one-on-one, instead of going through and telling people how I'm doing it, where I'm scaling, where I'm getting my money, I figured you're one of my top 5 lenders, right, that I've been utilizing over the last 5 years. And the relationship we've grown, we have a sick line of credit with you. And so what I want to do is I just want to pick your brain, and I want to speak to the people as if they're brand new, somebody who wants to get online with you as a newbie. And whether they're brand new, they've been in the business for a little bit, or they're looking to really take their company to the next level and scale, getting online with Lending One is the same process. After the fact, if they're new or if they're experienced, there's a different process after the fact, because you can get them a nice line of credit if they're seasoned like myself, a $3 or $5 million line of credit, which is really going to help them scale their business. If they're brand new, you're only going to do like 1 or 2 deals with them at a time to make sure they can handle it, right?
Right. Absolutely. We want to make sure that they don't get, in over their head.
So let's do this. Let's start with your company. What is the company name? Where are you guys located out of? Let's start with that, and tell us a little bit about you.
Yeah, sure. So Lending One was started about 4 years ago. We have our headquarters in Boca Raton, Florida, and I'm based here in New York City. So we have 2 offices. We cover 45 states, so we are a national lender. We do have a variety of projects. Mainly is buy, fix, and flip, right? So we can do construction loans for value-add projects in the 1 to 4 family space. We also have a product for if guys are graduating, they want to get into like multifamily redevelopment. We have a product for that, and that's for deal sizes over 5 units for 500 up to 10 million. And this year we rolled out a ground-up construction product for single-family, multifamily, and mixed-use properties. That's the same general guidelines, about 500,000 to 10 million, and in 45 states. We also do rental refinancing, so we can help with.
So I've been, not to cut you off, but I've been utilizing you a lot for the rehabs, the buy, renovate, and flip. And I've also been utilizing your team a lot for the buy and hold, right? Because anybody that's in this business, they realize that the transaction side of the business, the rehab side is great. You're making you 30, 50, 75, if you're lucky, $100,000 in the rehab profit. But you really need to take that money and invest it into long-term assets and again to generate wealth for you. And I started with you, I think about 4 years ago, buying the single families. And we built up a significant portfolio over the last 4 or 5 years. So you have good products for that.
And I would say probably 80 to 90% of my clients are just like that, where they will rehab, they'll fix up the properties, and then they'll keep a portion of them as rentals.
Right, smart business.
So it is, we're one of the few lenders that you can do both with us. So we can be almost like a one-stop shop.
All right, so they understand the various product that you have. Awesome. So let's just say now that they don't know Lending One. They want to get online with Lending One, whether they're brand new in the industry and they want to do their first flip, or they're a seasoned veteran like myself and they want to expand, they want to scale. What's the process? Because I know a lot of these lenders out there, it's not easy in the beginning getting online. I know it's painful a little bit in the process in the beginning because you have to give a lot of information. But once you're online, you're booted, the freaking process is simple. It's squeaky easy. So just talk to the fact of what it's like to get approved with you guys. What do they have to go through?
So yeah, you hit the nail right in the head. The first deal is always the hardest, but once you get past that first one, it becomes very simple. Meaning, we're a fintech company, so we do have an online portal, online platform. So basically, usually the first piece in the process is a call with me, and just kind of go through what they're looking for and give them an idea of what to expect. If everything is,
let me ask you this, Mike.
Yeah.
Do you think it's wise for them to contact you before they have a deal so they can actually get approved with you as an approved buyer, so they know they can go out and actually start buying properties? Because I got to tell you, from a rehabber's point of view, the last thing you want to do is find the property and then it take 60 days to get booted on to try to get approved. I think it would be smart if they want to do this business or they're doing it before they even have a deal, contact you, right? So they can get the ball rolling to get approved as a buyer.
Absolutely. So we can get clients approved depending on their size, whether they're new or experienced with in the system, either for a generic approval or for a credit facility. And the process is pretty similar. Basically, we have an online platform. They fill out the application. That becomes their base starting point for their app, right? They can upload all their documents. So everything's there for their future deals, right? So basically, once you get set up with an approval, you don't have to keep coming back and submitting the same items. You just need to refresh some documents and property documents, and that's it. So really, once you get that,
so let's talk, if we can. Let's just talk about some of the information they're going to have to give, whether they're seasoned or not, to get online with Lending One. What are some of those documents they're going to have to give to you to get approved?
Just the basics, bank statements. We ask for a construction project, 2 years of tax returns, your LLC documents, real estate schedule with your past flips, and that's pretty much it for the borrower level documents.
Okay, now if they're kind of new and they don't have any actual hands-on experience renovating and flipping, will you take on a guy who he might have some equity, he might have some money to put down on a property, but he's not done a deal yet? How do you handle those types of new buyers?
So we can work with new clients, right? Obviously, we do generally work with more seasoned folks, right?
Right.
But we can work with a new client. So if a new client comes in, the biggest thing is they have to be able to show that they have the liquidity to get through the project, as well as post-closing liquidity, so that ensures they have successful flip. So that's really the main thing. We also look at credit. We also look at income, right? For a newer person, that becomes more important than, someone that has, 10 deals under their belt.
Okay, so this is good because what I do, I have a product where I have a lot of guys out in the field where they're finding properties. They don't have the experience. They have some money, not a lot of money, but they want to get involved with and start doing the renovation. So if anybody's on the call listening to this that's kind of new, you have the mindset of wanting to flip, you have some money saved, 15, 20, 30 grand, but you don't have the rest of the liquidity to make the deal happen, because Lending One's going to want you to put some skin in the game, and they're going to want you to have a past in most cases. If you don't fit that criteria, that's where I can start joint venturing with them, bring them in underneath our umbrella that myself and my cousin put together, bring them in here. We can then do a joint venture. We can split the profits. We can get the line from you with them. We can oversee the project, and that will lend them credibility to get them to do 2, 3, 5 deals over the course of a year. And then they can go out on their own and work with you direct, right?
Absolutely. So if you are willing to do that and you find good projects, and we actually recommend that for most newer folks that are trying to get in, but maybe they're a little bit light on liquidity or a little bit light on experience. If they can partner up with someone experienced, that will make a huge difference in their first few deals. And I'm sure they'll learn a ton too from you and Yeah.
Well, I've done that when I got started in the beginning. After years back, I lost my mortgage bank, and I gave away the house. I gave away a large percentage of my deals, 80% in the beginning, because I had no money to get back into this business, and I was borrowing everything. And so I leveraged people who knew what they were doing, who had cash. I got involved, and I quickly, over a year's time frame, was able to start doing deals myself. So if they're on the phone, they're listening, and they want to get involved, if they're new, and after they speak to you, if you're like, you know what, this is probably going to be something that you should get Billy involved with, because I'm not looking to just grow my network. If they go to you, they're a decent guy, but they just don't have the liquidity, they don't maybe have the credit, then what they should do is they should call me. So my number direct on that is going to be 800-793-5015, extension 100. That's 800-793-5015, extension 100. If after you talk to Mike, I'm going to give you all of his information. He'll take you through the process. You guys have deals only in New York and New Jersey. I'm not going any other states that's not doing renovations and partnerships. New York, New Jersey, we have our teams built out there. We'll be able to joint venture with you and come up with a a fair, equitable deal for both them and for myself. And then, of course, you can get the business on the lending side. So now let's talk about if they're seasoned, right? They have to go through the same process. They're seasoned. Tell us about the lines of credit that you offer, because you offer pretty good lines of credit.
Right. So for, the biggest advantage for a seasoned guy, they can make offers, because most guys like yourself, they have multiple offers in at any time. Things come up very quickly. When it rains, it pours. So they know that they have a reliable funding source behind them. So we could get them approved for, a $2 to $5 million credit facility, where they'll know exactly what their rates will be. They'll know exactly the terms and leverage that we offer. Leverage could change depending on if it's a heavy renovation or a new build or something like this, but they at least know exactly where they stand and how much they can do with us. So that gives a lot of confidence to experienced guys. Plus the fact that we can close, deals in 10 days or less. I've closed deals in as little as 7 days. So despite the fact that we're a national lender, we can also move very quickly.
Okay, and I can 100% vouch for that, because I've been dealing with you guys for, is it 5 years now or 4 years?
It's been about 4 or 5 years, yeah. It's been a while.
Yeah, and I know, the stress factor with dealing with lenders, most lenders that are out there, is they all talk a good game up front, and they all want to get your business, and then once you're actually in, they drop the ball and they suck when it comes to service. Now, I don't particularly like you at all. As a matter of fact, I can't stand you. No, on a serious note, I value you because you answer your phone, you get back to people, and then once it's in your underwriting department, you guys turn the shit over quick. And most of it's automated. Like my girls are doing everything online. We're putting the deal online. Within 2 minutes, it comes back with the approval list. If it's a little shaky and it's off, we give you a call. You knock it up to what the LTV has to be, you do the rate the right way, and then we get the appraisal ordered, and within a couple of days, we're clear to close. As long as we have clear title and we have LLC docs uploaded, we're clear to close within generally about a week and a half, 2 weeks.
Right.
And if we need a rush, we need a push, you guys can push it.
Exactly. So if we need to move quickly because it's a pre-foreclosure or something's going to auction or something like this, we can get things done. And we have flexibility too. Like if it's an experienced guy, they can't get access to the property, we can do a drive-by appraisal, case by case. My point is we can do whatever it takes to be creative to get deals to the finish line.
And you have. I mean, you've definitely done all that and more when it comes to getting our deals done over here at Max Returns and Easy Sell. So let's go through now. They have deals they're going through now. Let's just say you get them involved, you get them up and running, they're pre-approved with you, whether they're a newbie or they're back end, you get them a line of credit. What's the process like now? They find the property, what do? How easy is it to actually boot on a property and get it done?
So once you're past your first deal and we have all your docs, you have an application, it's as easy as just sending over you fill out the property level application, which takes less than 2 minutes. And then you provide the contract and the budget. I'll review it and submit it in underwriting. And then typically we can have a term sheet for you in 2 or 3 days. And then from there, it's appraisal title fund. So once the first deal's out of the way, it's really as easy as a few clicks on the computer and the contract and the budget, and that's it.
Where have you? Let's talk about loan to values, about how you guys you lend. What do you lend on? Will you lend on rehab costs? Will you lend on purchase price and rehab? Let's talk about that piece so they understand what that means.
Right. So some people will say, why don't I just go to the bank, right? Because the bank generally won't give you construction dollars. So that's where we can really provide a lot of value, is when you have a renovation project. Basically, we can go up to 90% of total costs. That's how we structure most of our deals. It's based on LTC, loan to cost. Yep.
Right.
And we can go up.
So let's just go into that for a little bit. So
Sure.
For people who are listening, we have a property we're buying for $200. We're putting in another $100,000 in renovation. Total cost is $300. The property value resale is $499. Of that $300, you'll lend 90% of both the purchase and the rehab. Is that a fair statement?
That's correct. And we don't charge interest on the undispersed construction dollars. So
now a lot of people don't even realize what that means, and that's huge because a lot of lenders do, and that saves me and my company tens of thousands of dollars a year in interest savings. And explain what that is.
Right. So some lenders will flash a real low rate, but they don't really explain that they're charging interest on the entire ticket or the entire loan amount, whether it's outstanding or not. So in that example, if you have a $200,000 purchase, $100,000 being held back, roughly 33% of the loan is not going to be advanced at closing, right? So that 100K.
But most lenders actually charge you interest on that.
Yeah, a lot of guys do. So that 100K doesn't accrue interest until you pull down your construction. We are very flexible too, so you can pull down that construction however you like. If as little as 10K increments, if you want to take 2 draws, if you want to take 1 draw at the end, it's completely fine with us as long as obviously you're getting through the construction. But that makes a big difference on the effective rate of the loan.
Big time. 100% it does. We did an analysis in here, and like I said earlier, it was tens of thousands of dollars a year in interest savings when we transferred over to you and 2 of our other lenders. There's another 2 that they charge interest day one. Whether you draw down or not, you're paying interest on the money. And that sucks. Not fair to guys like us.
Right. It makes a huge difference on the total cost in the financing. So we'll fund up to 90% of total cost for anything under $1 million, let's say. Anything over $1 million, it's just case by case. Those deals will price and size more like a commercial transaction, depending on the size and the scope of the project, or if it's ground up.
Right.
But generally, for a buy, fix, and flip, up to 90% of total cost, not to exceed 65 to 75% LTV. So for experienced guys like yourself, we can go up to 75 LTV, which is nice because if you get a low appraisal or something happens, you have a lot more flexibility. As an example, some lenders will offer 100% of total cost, right? But it's usually capped at like 65 LTV, which, as deals, with that kind of margin are hard to come by, where you could be in at 100% of your costs.
Explain though how you're coming up with the LTV, because some guys on the phone, some girls on the phone might not completely understand how you come up with those numbers. So what does that mean for a layman?
Got it. Sorry. So when we when we order the appraisal, we'll ask for 2 values: the as is, what the property's worth today, and then we'll give them your construction budget, and we'll ask them what the property will be worth after the renovations. So basically, once we get that subject to or after repair value back, that's used to size your loan, right? So meaning that number cannot exceed more than 65 to 75% of your total loan amount.
Got it. Good. So a lot of people, if you're listening, you understand that. If you have questions, you can speak to Mike about that more in depth. But it is a plus, especially with a guy that's seasoned. You can go up to 75%. And to your point earlier, you said every once in a while you'll have to do a drive-by on certain properties because, listen, I'm one of the guys out there in the industry. I buy a ton of properties that are occupied where I have to evict. And with those properties, as you know, it's hard to get in because the tenants don't want to leave. So you'll do a drive-by, which generally drops the appraised value, the resale value, because we can't get in. You can't really see what's going to go on. You hold back a little bit of money, but that helps if you're lending me 75% or 65%, because that means I'm still borrowing 90% of total cost,
right,
on average, which is huge.
Yeah, it makes a big difference. Or there's a variety of reasons, but for experienced guys that can go up to 75, that have that flexibility, it just allows you to do more things, really.
Yeah. Talk about so we got the LTVs. What are your rates like, and what are your points like? And I know it's a wide range, so you could speak in generalities. Because guys that are brand new, of course, you're going to have to pay more in the beginning when you're brand new because you don't have the experience. Versus a guy who's completely seasoned, like myself and my team. We've been with you for 5 years. We have good credentials. We have good balance sheets. So, speak in the wide range.
So rates for fix and flip value add projects start the 7s to 12%, right? That's our general box. And that's interest only. And again, none of our loans accrue interest on undispersed construction. And then points, usually, we're in the neighborhood of 2 points plus or minus to originate.
Got it, which is fair.
And the fees, so a lot of people would throw out like low fees too, like low points. Our fees are very low. So we don't have too much junk fees. We have in-house counsels. So on a bridge or fix and flip deal, The standard doc prep legal is going to be $695. So you have your points and then you have your $695. That's the only two fees you'll see on the HUD from us. And then what we do is for every client, or for new clients especially, we'll submit your deal in underwriting, get you a term sheet so that you can be able to review all your terms in black and white. And then at that point, the only deposit we ask for is just the appraisal payment. And that's usually between $500 and $550, whether it's single family or multifamily.
And that goes directly to the appraisal company. That's it.
Exactly.
You're not making money on that. That goes directly to them. So, pricing you guys out, looking at your fee structure compared to a lot of the other lenders that are out there, I have to say that you're very low, extremely, extremely competitive, because I've seen lenders out there that have, a $1,900 legal fee, and they have a $1,500 underwriting fee and a $495 doc prep fee. Before you know it, it's like $6,000 in junk costs, which is like 3.5 points. It's ridiculous. So you guys are very fair. And I want to also stress another point, Mike, because people who are in this industry and actually know what we do and they're seasoned, they'll get the interest rate factor. But people who are brand new that are like, what? I'm not paying, 12% and 2 points. That's crazy. Well, if you're a rehabber and you're doing a job for 40 or 50 grand, you have to realize you're going to have that deal from beginning to end. You should have it no more than 6 months. So if you're really looking at your total cost, your interest that you're paying, if you're at 12 and 2, that's 14% annualized. Over 6 months, you're only paying 7% for the money. Cheap freaking money compared to what else is out there.
Right. And, a lot of people, especially new people, I'll just go to the bank, right? Well, you could go to the bank, right? But generally a bank's more for like homeowners or things like this. But, the thing is,
forget it. If you're in our business, you're not going to a bank, dude. The bank is going to take 90 days, 120 days, 65 days to get these deals approved, and it's brutal.
Right. They put you through the ringer, but they're not going to get you the cost, the leverage that we can get you. So, again, it comes down to like, you can push dollars, you can push rate. So, our rates aren't the cheapest.
I like pushing deals. Listen, if I have you on my team and I can push deals and I can start popping out 50, 60, 70 grand a deal profit, if it's costing me 7 or 8% every 6 months, I can care less. It's all built into my cost factor, into my structure. I know what I'm making on the back end. As long as I'm not getting robbed, I'm totally fine with it. As long as I have a lender who's going to be working with me, you guys, you've seen me grow, you're increasing my credit line. So I appreciate that. I'm adding value to you. Likewise, you're adding value to me. And that's why, when we spoke, I said, I'd be more than happy to do this webinar because frankly, I can't field these phone calls anymore. It's overwhelming.
Right. And to that point, right, our platform allows for guys to grow. And really the trade is that, you can do more projects with us, right? So the idea is if you, if you're an experienced guy, the whole idea is to be able to do more projects, get more deals, and then obviously the cost is more than justified, because if you could take on 2, 3, 4 more projects a year, it makes a big difference.
Absolutely. Like we do every Wednesday, we have an operations meeting from 9:30 till about almost now 12 o'clock because we have such a pipeline. And at any given time of the month, we fluctuate between 60 and 75 properties that we're in contract to purchase. And every week, we have 2 or 3 that are popping that we're getting clear to close. Most of these deals that we have, they all have title issues, right? So, they all have funky stuff with title, multiple mortgages. We have to clear multiple people that are on there, but we're only able to keep the faucet on, to keep the spigot on, to keep the marketing going because of the relationship we have with you. And then we do some other things in the back end when we turn some of these properties over. But listen, it's been a good run with you. I'm happy. I know the market's shifting a little bit. So there's going to be some players, I think, in the next year and a half, 2 years, that are going to probably be shaken out. I know you guys have strong financials. You guys aren't going anywhere. So if they're out there, if you're listening and you want to get online with Mike, there's 2 things. I have a special telephone number and a URL you can go to. Go to www.maxreturnsprivatemoney.com. That's Max, M-A-X, returns, R-E-T-U-R-N-S, privatemoney.com. That will go right over to Mike. He'll know you came from us. And also, if you want to contact him directly, you can reach him at 866-249-7072, extension 700. Again, that's 866-249-7072, extension 700. So, Mike, they get online with you. They have a deal. They put it through the online system. They pay for the appraisal. What are some of the struggles that you've seen with guys coming in where they get themselves caught up where the deals go awry? Like, what should people look out for, whether they're new or seasoned, when it comes down to rehabbing? You and I spoke about a couple of these a few weeks ago, and I know we're on the same page with this.
Yeah. I think the biggest mistake, generally new, but even experienced guys run into this, is they underestimate duration. How long is it going to take to get through a project, right? Whether a lot of things are outside of your control, whether it be plans, permit approvals, something unforeseen in the construction. Usually duration is the biggest thing that I see where guys will overshoot their projected targets than undershoot. Most guys, when you get them on the phone, new or experienced, I'm going to be out of this project 3-4 months, but more times than not, you're waiting for the seller's financing or the buyer's financing to come through, or whatever the case may be. Right. It takes longer. So the one point is we do give as a standard 12 months for all of our bridge loans, buy, fix, and flip, right? That's where some other companies can be between 6 and 9 months. And then there's usually pretty hefty fees for extenders. So that's one thing that, is a benefit. And then for our bigger projects, we can go 18 to 24 months for larger scale construction. We have
a couple of those with you.
Yeah. So we try to match up the project size and scope to the duration of the loan so that, it hopefully will avoid those extension fees.
So let's go to the, because your point is phenomenal when it comes down to the time it's going to take to flip these properties, right? So what our team knows is that we have a run rate. We run right now about $11,000 a week on renovation costs. So we know we can do a quick calculation. If we have a $60,000 renovation budget, we know we're going to be in that property between 6 and 7 weeks if everything goes right. That's the key thing, if everything goes right. We also know that if it's a permitted job, that we have to add on at least 90 days, because we always do about 6 months for properties that are going to take us about $100,000 in renovation from the day we buy to the day we actually sell. And we're always right within there, within 4 to 5 weeks. But we know if it's permitted, it's going to be a 9-month process, because the towns in the last year and a half, 2 years have been cracking down like crazy. And there's some towns out there and some villages that just take forever to get anything approved. In the beginning, for you to get permits approved, and then afterwards with the inspections, it's a pain in the ass. So if you're new, understand that. If you're seasoned, the pain that everybody's feeling when it comes down to renovation, when you have to get permits in place. It's a pain in the ass. So what else is there that you found? Because I know there's 2 others that we have that a lot of guys that have come to us, they're screwing this up. They're underestimating and overestimating. What else is there where people screw up when it comes down to renovation?
So one thing is just, when you have a project, right, you have to be able to determine the highest and best use of that project in relation to what you should put into it, right? So as an example, like someone like you that's done 100 projects, exactly what kitchen sells in the area, what bathrooms, what finishes are going to net you the best dollars in relation to the market you're operating in. Some guys will over renovate, some guys will under renovate, and it hurts you either way. If you under renovate, you're not going to get top dollar for the project. If you over renovate, then you're going to be less profitable. So that's another thing that we see from time to time, is just knowing your market and knowing what's the best finishes to put in there that's going to maximize your return on that property and limit the amount of days on the market too.
Awesome freaking point, dude. I mean, that's a killer one. You go into certain areas, and if you're not up to par, if you try to cheap out in certain areas where it calls for a kitchen that's going to cost you X, and you're going in and putting in a Home Depot shit, you're screwing yourself. And you think you're going to save money, but you're really costing yourself a shitload. What we found, in addition to that, is a lot of guys that come in, whether they're new or seasoned, they are generally underestimating what it's going to cost to repair that property. I buy a lot of properties from the wholesale side, so I'll have guys that will send me deals. They're like, the house is going to sell for 400 and it only needs 30 grand. And I look at the pictures and I'm like, this is a freaking $65,000 rehab all day long. There's no freaking way in hell it's a $30,000 rehab. So guys that are flipping properties, the 2 other things in addition to what Mike said that you have to be aware of is they overestimate what it's going to sell for, the house. They're always very aggressive on resale value. They're to your point earlier, they think it's going to sell in a quick time frame, so they're not adding in the appropriate amount of months that they have to hold on to it, and they're way underestimating what it's going to cost to repair. You take those aspects into consideration, and you have a property that you're analyzing. You think you're going to be making 50 grand on it, and if you don't sell it for what you think you're going to sell it for, because you're overestimating and being aggressive, you come in 15 or 20 or 30% over budget on the rehab side, and it takes you 9 months instead of 6 months to sell it. Your $40,000 or $50,000 profit just went burnt up and is down the toilet. You can literally be upside down, break even at best, or lose money at worst. I've seen it happen. It's happened to us. I'm talking from experience. We're not perfect. Over the last 5 or 6 years, we've made mistakes. We've lost money. And nobody likes to talk about the money they lose. They only like to tell you the money they make. But I'm telling you, we've lost on deals. Not a lot because we have a proven system. But, man, every once in a while we get punched in the chin, and it hurts.
Yeah, I mean, it's unavoidable, right? There's always going to be one or two projects that are, that don't work out exactly the way you planned. But I think, like, you guys have a system. You know exactly from your budgets to sizing deals to, there's a lot that goes into it. I would say for new investors, the biggest thing that they make mistakes on is accurately sizing the comps in the area in relation to the school district, the distance from the subject property, the acreage of the property, the bed bath count, all those things will factor into your exit. So, you see a lot of guys who want to jump from town to town because it's close. But if they're completely different school districts, you can't do it. It's going to make a huge difference on your exit. So that's one thing for newer guys. They really have to be very, very cautious on what the realtor told them or what the friend told them what they're going to sell that property for. You have to make sure that you're accurately comparing it.
In the last year, probably year and a half now, I've had a good 18 people that have come to me that they had money to renovate. They don't need my cash. They don't want me to help them on the renovation side. But they hired me as a consultant just to overlook their deal for a small fee, just to see if what they're putting together, because they're dealing with the realtors. And we all know, listen, I love realtors. I depend on realtors for a lot. But there's some realtors out there who will tell you the deal is worth X just to sell you that deal. So they make their commission on the front end. And then when it doesn't sell in the back, they're like, well, the market shifted. I don't go for that shit. So we've had guys in the past that have come to us like, listen, just overlook the budget, overlook the scope of work, overlook the ARV. Let me know if I'm going to get myself in trouble. And, there's been quite a few who I'm like, dude, you're way overestimating what this house is going to sell for. And some of them fought me on it. And what happened 9 months later, they ended up selling for a lot less than what they thought. And they came back and like, bro, I should have listened. I'm like, yeah, that's a $20,000 mistake. You paid me to help you. You didn't listen. Shame on you. But it's a $20,000 mistake that you're never going to make again. Again, if they want to get in touch with you, Mike, I just want to give them the website again. You can go to www.maxreturnsprivatemoney.com. That's maxreturnsprivatemoney.com. Or the telephone number to reach Mike direct is 866-249-7072, extension 700. Let's talk about the deal's in. They're renovating. They want to do a draw request. What is that like? What's the process like? And is it painful or is it kind of easy?
I think we're very good at draws. So basically, like I was saying before, the online portal, you have your account set up. You basically log in. You submit your draw request. That will trigger an alert to our construction team. They're in Florida. Basically, they then order the inspection. The inspector should contact you within 24 to 48 hours from when you submit the draw request. And that draw should be turned in 5 business days. So if you submit your draw request Monday morning, you should receive the funds no later than Friday afternoon. Yeah,
and it happens. Every day I'm getting wires from your team. I get the wire alert that we just got $45,000 deposited in. It is kind of painless. Are there fees for the inspection?
Yes. So the inspection fee is $150, and that will come out of the draw. So basically, some lenders will make you pay the inspector directly. The nice thing is if you have your contractors there and they're working, you can send the inspector and then they'll just take the $150 out of the draw. And that's just a pass-through fee. We don't make any money on any third-party fees. That just goes straight to the inspector.
Yeah, with us, I don't think we've been at that job site once with an inspection. We just give them the code. If our contractors did that, great. If they're not, and we have the passcode on the door, the lockbox, the guy goes in. He does his shit. Every once in a while, he'll call and be like, listen, I can see the kitchen's almost done. It's not done 100%. I'll have to come back next week just to finish it off to give you the final draw. But I got to tell you, the draw request with you, there's another 2 companies out there that have been pretty freaking good with it. But Lending One overall, you guys have a good process now.
And
Definitely happy with the way it's working.
Yeah, and we're pretty flexible. Like in that example, right? Some lenders won't give you any money for the kitchen if it's not 100% done, right? Where we will give you, percent of completion based on your budget. And then worst case, you have to come back for the other remaining once everything's done, right? So
yep.
we try to be as flexible as possible with our draws.
Good. All right, so let's wrap it up. We've been on for about just about 40 minutes. I don't know if I could do questions. My shoulder's killing me. I don't know if I could do questions on here. If somebody has a question, you want to type it in? I don't even know if I'm going to be able to answer, to be honest with you, because this is all new to me. So if they have a question, type it in. And I don't know if I can do it. Questions. Here we go. Question answers 4. Greg Grubber. Perfect. Billy, what type of ARV do you do for a novice or experienced? So I think we answered that one, right? Yes. What type of ARV do they give to a novice or experienced? So let's answer that one.
So for newer guys just starting out, they're going to be capped at 65 LTV. And we don't fund based on LTV. We just size our loan. So you still have between a 75 and 80% loan to cost max. And then that number can't exceed more than 65% of the completed value.
Got it. I have a couple more on here. Greg again, I love Greg. This guy's questions. Also with your JV, what parameters are you looking for? So Greg, contact me directly on that one. 800-793-5015 extension 100. What I'm looking for is if you have 0 experience, we're not going to be looking for you to do a renovation that's going to cost $150,000 on the renovation side. You'll never be able to handle it. If you have a deal that needs a $40,000 or $50,000 renovation, you have some experience, we could let you run with that job. If it's a bigger renovation, my cousin Wayne, who is the absolute best in the industry, we will partner up and get him involved and have him oversee the project. So again, it's a case-by-case basis. It's really hard for me to answer what the parameters are because it's really based on your experience, what you're bringing to the table. Are you bringing money? Are you bringing expertise on renovation? Are you bringing, obviously, the deal? So just contact me direct on that, and I'll be more than happy to speak, one-on-one with you. Greg, are the loan terms 6 months or 12 months? We covered that one. The loan terms are 12 months, right? And generally, if a lot of these other players that are out there, they're 6 to 9 months, and then you have to pay half the extension fee.
So minimum.
Greg, again, this guy Greg is on fire. Love this guy.
Greg's got a deal teed up.
He does. Yep. So do they include the landscaping as a value add? I have landscaping in my budget when I send it over to you, and it's not a ton, but if it's a brand new house that has nothing in it, it's going to cost us $4,000. I've got landscape drawings from you guys. Yep. As long as it's in the budget, it's part of the design. You can definitely get the amount, Greg.
And we'll even allow up to a 10% contingency on all of our projects. So if something goes a little bit over, or you need the funds for something unforeseen, you at least have that baked into the budget.
Yep. George Johnson was asking, what is the website again? The website is Max Returns, RETURNS. I actually spelled it wrong in here because I can't spell to save my life. I type with 2 fingers. It's Max Returns privatemoney.com. Max Returns privatemoney.com. Greg, I hope I'm saying his last name right, Gruber. Are the closing costs included? No, you actually have to pay the closing costs out of pocket. Correct, Mike?
Right. Unless it's a refinance of a rental property, then obviously if you're getting cash out, you can roll the closing costs into the loan.
Yeah. And we've done quite a few of those with you. And then Greg said, thanks again. If there's any other questions, type them in here. Otherwise, I think this was a pretty good session with you, Mike. I appreciate your time. Let's just give the guys the telephone number again. Oh, George, what is the max loan percentage for rehab costs? You want to take that one?
Yeah, so basically what we do is on all of our, you can go up to 90% of total costs. So your construction is always net fully funded, right? And then basically if it's a, if it's a $300,000 purchase with 100 in renovation, that would be 40,000 total in equity that you would have to bring for the down payment, and that $100,000 that's held back is fully funded at closing. So you don't have to bring any additional dollars except for your payments.
Let me ask you a question. Nobody asked this. Do you do advances on your draw, like at the table? If it's a $100,000 renovation, and this guy, he's eager to start, but he doesn't have any additional money to do the renovation because he's counting on you for it. Will you give an advance at the table? How does that work?
We do, yeah. So that's a good point. So it generally depends on the deal size and scope, right? But we can advance usually between 5 and 10% of the total budget as an advance to go towards, materials, deposits, just to get the ball rolling.
Perfect. And is there a fee for that? You guys hit them? Do you knock off an LTV, hit them with a point, anything like that, or no?
No. That's just part of our standard, product.
Good. Perfect. Let me see. I think I have another question. I'm going to kill his last name. He's Greek. Antonios Mamonikis. Who determines the construction costs? So I could speak on my behalf, but you can go and then I'll talk as a rehabber. You talk as a lender. Right.
So a couple of things. Generally we'll have, we have our construction manager review the budgets, right? But when the appraisal is done, usually, if there's an issue with the budget one way or another, they'll say it. The appraiser will say something like, hey, this budget's too light or too big or whatever. And then if it's a larger project, so if you're going to add any square footage, or if you're doing a new build, we'll get what's called a feasibility inspection. And that's an inspection that will determine if the budget is adequate to cover the required work.
So from a rehabber's point of view, let me tell you how we do it. Mike and his team have a very simple Excel spreadsheet that they give to you that outlines your basic costs. Do not go crazy trying to fill out every single thing inside there. Like, you're going to be putting in crown molding, and you just come up with a general idea line item cost, which is very simple. It breaks it down on the sheet, figures out your landscaping, your roofing, your siding, your doors, your bathrooms, your kitchens, your flooring, any painting, and your landscaping, and the miscellaneous. You put that in, you send that Excel spreadsheet over to them. When they order the appraisal, they're going to take that sheet to the appraiser. They're going to look to see what you're doing to the property, what you think the ARV is based on those renovations, and of course based on what the comps are telling you. And then they'll come back. I don't think I've ever, except for one, had you guys come back to me and say, hey, your renovation costs seem to be off. Listen, sometimes we'll put it in and we'll be a little light on our budget, or we'll be a little heavy, and but generally we're a little light because always something happens. Always with the renovations.
Yeah, we're not sticklers on the budget, but we do a lot of loans. So we know what things cost, right? Like, if it costs $150 a square to build the property and you submit $150 a square budget, right? We're going to know something's off. But generally speaking, like, we're not sticklers. We want to see the work get done. We want to see you have enough capital to get through your renovations. We're pretty flexible.
Yep, I think I have another question that came in. Antonio, so I hope that answered your question, bud. George Johnson, Billy, do you have a criteria when you select people to joint venture with? For example, how much cash or credit score? So, George, it's a case-by-case basis. And the reason why I say that is I've had guys with no history at all, but they have good values, they have good drive, they have good business intuition, and we've partnered up with them. I've had other guys that were, they've had experience, they've had a business issue in the past where their credit was all jacked up, and we've done business with them. I've had people who they looked good, and once I got to know them and I did my research, they were shady as shit. And so I decided not to go down that road. So it really, to me, it's an individual. I want to get to know you, I want to get to like you, I want to get to trust you. And if you meet those three criteria, and you have a deal that's going to make us money, by all means, George, then we're going to do that deal with you. If you have a deal that's just fake as shit, you send me numbers that don't make sense, and then you're not going to be the right guy. But if you have a deal, even if you don't have a deal, give me a call. We'll schedule up an over the phone meeting. We'll get to know you a little bit, and hopefully, if you're a good fit for us and we're a good fit for you, and you're brand new and you find a property, we're not going to find you properties. That's the one thing we're not going to do. or we do wholesale property, but we're not looking for us to give you a property and run it and do everything else. If you're new and you find properties and you need to leverage our expertise and our back office and our construction company and help you get money, by all means, we can do that deal with you. Hope that answers, George. Any other questions before we end it? I'm going to go once, going twice. I think we're good, Mikey. Oh, I got another one popped up. Oh, my handsome cousin. Great job, fellas. Wayne Hartart on the call. I think we're good. I think this was, Mike, honestly, informative. I think it's going to get you some business, which is awesome. I think it's going to get us some business on the rehab side, which is awesome. And, the whole purpose of this is really to give back to the community and to start to really bring people into our network and get them involved with the people who's helped us over the last, 5 and 6 years. And, I'm not blowing smoke up your ass. You're a good guy, not only in business, we hang out, we socialize Matt every once in a while. We go out. You're a good dude. I think some annoying guy, Adam, introduced us, if I'm not mistaken. And if he's on the call, sorry, Adam, had to just bring under the bus a little bit. But, it's been a pleasure, brother. I appreciate it. Again, let me just give the website again and the telephone number. If you want to get in touch with Mike, put in deals, go to maxreturnsprivatemoney.com. That's NAXRETURNS privatemoney.com. And you can reach Mike directly at 866-249-7072, extension 700. One more. Wayne Hartart, let's put Mike on the radio show. Yeah, that's next, dude. You're definitely 100% going to come on the radio show. You have a face for radio. Did anybody ever tell you yet? Most definitely, cuz we'll definitely get Mike on the radio. I think we had one other lender on the radio, the Habermans, another good group of guys, man. Good, just solid family-run business, good guys. And so, if they're good and they're on a network, we want to start sharing the wealth with the people that are out there and start getting them to do some business. Mike, it has been a pleasure, brother. You did great. And then you said you were a little bit nervous. This is your first webinar that you've done?
Yeah, I think so. I don't usually do this, so it's a little bit outside my element, but it was great.
This was good.
Yeah, thanks for putting this together.
You did great, bro. I really appreciate you coming on. Everybody got some value out of it.
So, awesome.
Yep.
All right, thanks.
Absolutely. Billy. Take care, bro.
Take care. See you guys.
Bye-bye.